48 hours, that's all that separates you from the most important day in XRP's 2026. On Friday, March 27th, three things happen simultaneously. The SEC's final deadline on remaining XRP ETF applications, the $14.6 million options expiry on Darbit, and potentially the moment that determines whether XRP breaks out of the range it's been trapped in for months or stays stuck until the next catalyst. I've spent the last 2 weeks preparing you for this day. 30-plus videos covering every catalyst, every analyst target, every political development, every technical signal. And now we're here 48 hours out. So today, I'm going to give you the complete playbook: what to watch, when to watch it, what each outcome means, and how to position yourself regardless of which direction the market moves on Friday. Before I continue, this is not financial advice. I'm sharing publicly available information for educational purposes only. Always do your own research and consult a qualified professional. Let me start with what happened overnight, because yesterday's Clarity Act bombshell changes the entire backdrop for March 27th. Circle crashed 22%. Coinbase dropped 10%. The Senate revised the Clarity Act to ban stablecoin yield. The banks won the fight they'd been waging since January. But in winning, they removed the single biggest obstacle to the bill's passage. The stablecoin yield provision was the only thing holding up a bill that gives XRP permanent commodity classification under federal law. While Circle and Coinbase got destroyed, XRP rose 3.3%. The market is already pricing in the second-order effect. The yield ban is bearish for stablecoin stocks, but bullish for the Clarity Act's passage, and the Clarity Act's passage is the single most important catalyst for XRP's long-term repricing. Now, let me walk you through the next 48 hours in detail. Wednesday, March 25th, which is today, the market is digesting the Circle crash and the Clarity Act revision. Watch XRP's price relative to Bitcoin today. If XRP continues to show relative strength while the broader crypto market processes the stablecoin news, it confirms that the market views the yield ban as net positive for XRP. The key level is $1.40. If XRP holds above 140 through today's close, the bullish trend line on the hourly chart remains intact and we enter tomorrow's session with momentum. Also, watch Bitcoin closely today. BTC is around 69 to 70,000. The correlation between XRP and Bitcoin is 0.84 with 1.8 times amplification. If Bitcoin drops below 69,000 today, XRP will likely test A138 to A139 regardless of any XRP-specific bullish factors. If Bitcoin holds or bounces, XRP has room to push toward 144. Thursday, March the 26th, this is the day that matters most for positioning. It's the last full trading day before the deadline. Three things to watch. First, options positioning. Market makers who sold options at the 140 strike will be actively hedging as expiry approaches. If XRP is above A140, they need to buy XRP to hedge their exposure, which amplifies upward pressure. If XRP is below A140, they sell to hedge, amplifying downward pressure. The $140 level becomes a gravitational zone that the price orbits around in the final 24 hours. Expect choppy, volatile price action around this level. Second, ETF flow data. Farsight Investors publishes daily ETF flow data. If Thursday shows a spike in XRP ETF inflows ahead of the Friday deadline, it suggests institutional traders are front-running the expected approvals. A single day above 10 million in inflows would be the strongest signal since the March commodity classification spike. Conversely, continued outflows would suggest the market doesn't expect a positive outcome. Third, the news cycle. Any leaks about the SEC's decision could drop at any time. SEC decisions are sometimes reported by journalists like Ellen Terrett before the official announcement. If a leak drops Thursday evening, expect massive volatility in Asian trading hours before the U.S. market opens. Friday, March 27th, the main event. Here's the hour-by-hour framework. Pre-market 4 a.m. to 9:30 a.m. Eastern. Asian and European markets will have already reacted to any overnight developments. Check XRP's price action during the Asian session for early signals. If XRP is above A145 in Asian trading, sentiment is bullish heading into the U.S. session. Market open 9:30 a.m. Crypto stocks like Coinbase, Robinhood, and the XRP-linked Evernorth SPA will react to any pre-market news. Watch Coin and the broader crypto stock complex for sentiment signals. The SEC announcement window, typically between 10:00 a.m. and 4:00 p.m. Eastern. The SEC generally releases decisions during business hours. The ETF approval or rejection could drop at any point during this window. When it drops, expect a 5 to 10% move in XRP within minutes. If approved, the initial spike will likely be followed by profit-taking within the first hour, then sustained buying as the market digests the implications. If rejected or delayed, expect a sharp drop to the $35 to $138 support zone, followed by a bounce if the delay comes with a new timeline. Options expiry, end of day Friday. The 14.6 million in open interest settles. Any remaining hedging pressure unwinds. This can create additional volatility in the final hours of trading after hours. The real institutional reaction often comes in the 24 to 72 hours after a major decision, not in the minutes immediately following. Watch Saturday and Sunday's price action for signs of sustained directional flow. Now let me outline the three scenarios and what each means for your position. Scenario 1. ETFs approved, Bitcoin stable. This is the bull case. New XRP ETF products launch from Grayscale, 21 shares, Bitwise, WisdomTree, and CoinShares. Analysts project up to $8 billion in potential inflows over the coming months. XRP likely spikes to a $1.50 to $160 on the day, then consolidates before the institutional wave begins in the following weeks. The Clarity Act compromise makes April markup more likely. Elliott Wave 5 begins its impulse toward the 850 target. Standard Chartered's 280 becomes the near-term ceiling to watch. Scenario 2. ETFs approved, Bitcoin drops. Mixed outcome, the approvals are positive, but Bitcoin weakness caps XRP's upside. XRP might spike initially, then give back gains as Bitcoin correlation drags it down. This is the scenario where patience matters most. The approvals are permanent. The Bitcoin weakness is temporary. The repricing happens over weeks and months, not minutes. Scenario 3. ETFs delayed or partially approved. The bearish short-term case XRP drops to A135 to $138. The 127 floor with 443 million XRP in cost basis becomes the line in the sand. But critically, a delay doesn't change the fundamental picture. The SEC commodity classification is still in effect. The Clarity Act is still advancing. Goldman still holds 153 million. The delay just extends the timeline. In all three scenarios, the long-term trajectory remains the same. The infrastructure is built. The regulatory clarity is either here or coming, and the network activity continues to grow regardless of what happens on any single day. The difference between the scenarios is timing, not destination. Now, let me put the full two journey in perspective, because we've covered an extraordinary amount of ground together. On March 12th, Goldman Sachs was revealed as the largest XRP ETF holder. That same day, MasterCard launched with Ripple and the SEC-CFTC signed their Memorandum of Understanding. Over the next 13 days, we covered the trendline breakout, the manipulation debate, the 920% tokenization explosion, the 50-day EMA break, the SEC commodity classification, the Korean volume explosion, the NASDAQ filing under XRP, Trump versus the banks, the Fed crash, the Iran catalyst thesis, the Goldman analyst 1,000 prediction, the MLI Fool's $20 model, the comptroller opening the Fed to Ripple, the JP Morgan 120 billion report, the whale accumulation of 40 million tokens, the Elliott Wave completion targeting 850, the AI agent settlement infrastructure, and yesterday's Clarity Act bombshell with the Circle crash. 30 catalysts in 14 days, and tomorrow, the 31st catalyst drops, the ETF deadline, the culmination of everything this series has been building toward. Whether you've been watching since day one or you're catching up right now, the framework is clear. XRP's price at 141 does not reflect the infrastructure that's been built underneath it. The market has been suppressed by macro forces, oil, the Fed, geopolitics that have nothing to do with XRP's fundamental story. When those forces ease, and they will, the repricing against 30 catalysts will be violent and fast. March 27th doesn't guarantee that repricing begins, but it creates the conditions for it. And the Clarity Act compromise from yesterday makes the follow-up catalyst in April even more likely. 2 days, 1 deadline, 30 catalysts, and a price 60% below all-time highs. The setup has never been better. The clock has never been shorter, and the community has never been more prepared. Macro storms pass, infrastructure lasts. Smash that like button right now. Drop a comment telling me which scenario you think plays out on Friday. Scenario 1, 2, or 3. I want to see where this community stands before the deadline hits. Subscribe and hit the bell because Friday's video will be my real-time breakdown of whatever the SEC decides. You do not want to miss it. Share this with every XRP holder you know. They need the playbook before Friday, not after. I'll see you in 48 hours. Let's go. Wait, before I sign off, I need to go deeper on 4 things that could be the difference between making smart decisions and emotional decisions on Friday. First, the options mechanics. I've mentioned the $14.6 million in open interest at the $140 strike several times, but I haven't fully explained how this works and why it matters for the next 48 hours. When a market maker sells a call option at $140, they're promising to sell XRP at that price. If the buyer exercises to hedge their risk, they need to own XRP. If the price rises above $140, they buy more to stay hedged. If it drops below, they sell some. This creates a feedback loop called gamma exposure. On a normal day, this effect is small. But as expiry approaches, the hedging becomes more aggressive. In the final 24 hours before expiry, even small price movements around the $140 strike can trigger large hedging flows. If XRP drifts above A142 on Thursday evening, market makers start buying aggressively to hedge, which pushes the price higher, which forces more hedging, which pushes it higher still. This is how options-driven breakouts happen. But it works in reverse, too. A drop below a 138 triggers selling that feeds on itself. The practical implication is that Thursday and Friday will be the most volatile days for XRP this month. Do not use leverage. Do not panic if you see 5% swings in either direction within minutes. This is normal options expiry behavior amplified by a major catalyst landing on the same day. Second, the 90% approval odds deserve scrutiny because that number has been cited frequently but rarely analyzed. The 90% figure comes from the logic that the SEC classified XRP as a commodity, and they've already approved spot ETFs for other commodities like Bitcoin and Ethereum. Logically, rejecting XRP ETFs after granting commodity status would be contradictory and legally vulnerable. That's a strong argument, and I believe the approval odds are genuinely high, but the 10% chance of delay or rejection is not zero. The SEC could extend the review period rather than issue a final decision. They could approve some applications but not others. They could attach conditions or restrictions. The market is pricing an approval, which means if approval comes, the pop might be smaller than expected because it's already in the price. Conversely, a delay would catch the market off guard and could produce a sharper downside reaction. The smart approach is to be positioned for the higher probability outcome while having a plan for the lower probability outcome. Know your stop-loss level. Know your add more level. Don't let Friday's volatility force you into an emotional decision. Third, Let me show you how to read the ETF flow data in real time, because this will be the most important data point on Friday and the days following. Farside Investors publishes daily net flow data for all XRP ETFs. Positive numbers mean more money entered than left. Negative numbers mean outflows exceeded inflows. The magnitude matters as much as the direction. A $10 million inflow day is noise. A $0 million inflow day is signal. A $300 million inflow day is the institutional wave beginning. For context, when Bitcoin spot ETFs launched in January 2024, the first week saw over $4 billion in net inflows. XRP's first week of ETF trading saw roughly $300 million. If the March 27th approvals produce a similar ratio of excitement, the new products could see $50 to $200 million in their first week. That would be the clearest signal that institutional capital is entering. Watch FA Farside on Friday evening and Saturday morning for the first flow data. If the numbers are strong, the following Monday could be the real breakout day as institutional allocators process the weekend news and start deploying capital at market open. Fourth, I want to talk about emotional preparation, because Friday will test every XRP holder regardless of the outcome. If the ETFs get approved and XRP spikes to $150, you'll be tempted to sell and lock in gains after weeks of frustration. Resist that urge unless your plan was always to sell at $155. The approval creates a structural shift in access that plays out over months, not minutes. Selling in the first hour of a structural shift is historically one of the most common retail mistakes. If the ETFs get delayed and XRP drops to A135, you'll be tempted to sell out of frustration and fear that the thesis is broken. But a delay doesn't break the thesis. The commodity classification still stands. The Clarity Act is still advancing. Goldman's position hasn't changed. A delay extends the timeline by weeks or months. It doesn't change the destination. Selling at the bottom of a temporary disappointment while the fundamental thesis is intact is the other most common retail mistake. The whales who accumulated 40 million XRP during the 13% dip didn't panic. They bought. The institutions holding 153 million in ETFs didn't sell during the Fed crash. They held. Professional investors succeed not because they predict every outcome correctly, but because they have a plan for every outcome, and they execute the plan without emotion. Have your plan before Friday. Write it down. If approved and XRP hits X, I will do Y. If delayed and XRP drops to Z, I will do W. Whatever those answers are, decide them now while you're calm, not on Friday when the market is moving 5% in 10 minutes and your emotions are running the show. Now, let me give you the final analyst consensus going into Friday because this frames the range of outcomes. Near-term targets if catalysts land. Standard Chartered 280. MLI Fool says $3 back on the table. Ascending Triangle measured move targets 260. The consensus near-term range is $2 to $3 if the Clarity Act passes and ETFs expand. Medium-term targets for 2026. Coinedpedia, 641 Optimistic Case Standard Charter's original $8 target Elliott Wave 5, targeting 850. The consensus for an optimistic 2026 is $3 to $8 long-term targets for 2030. Standard Chartered 28-dummy Fool Velocity Model, 20 DAWs, Coinedia Moderate Scenario. 5 to 10, former Goldman Analyst 1000. The consensus long-term range is $4 to $28, with the outlier at a Thuwa's zero and bear case. Spitaco from NASDAQ sees 50 cents to $1 by 2030 if XRP fails to capture meaningful swift volume. CoinCodex near-term model sees 136 word. Analyst Casey warns of 87 cents if the $1.65 resistance holds. The bear case requires the infrastructure thesis to fail entirely, which means MasterCard, Goldman, Deutsche Bank, the SEC, and 300-plus banks all made the wrong bet. The risk-reward at 1.41 with credible downside to roughly 127 and credible upside to $3 to $28 is asymmetric in a way that rarely exists in any market. The downside risk is roughly 10% to the structural floor. The upside potential is 100 to 2,000% to various analyst targets, and the catalyst that could begin the repricing is 48 hours away. This is the setup. This is the moment. And this community is more informed and more prepared than any XRP community in history because we've spent 2 weeks dissecting every angle. 2 days, 1 deadline, 30 catalysts, and a price 60% below all-time highs. Macro storms pass, infrastructure lasts. Smash that like button right now. Drop a comment telling me which scenario you think plays out on Friday. Scenario 1, 2, or 3. I want to see where this community stands before the deadline hits. Subscribe and hit the bell because Friday's video will be my real-time breakdown of whatever the SEC decides. You do not want to miss it. Share this with every XRP holder you know. They need the playbook before Friday, not after. I'll see you in 48 hours. Let's go.